Good morning, everyone. Thank you very much for joining us today. I am Gemma Yates. I am the Investor Engagement Lead at ACCR, and I'll be hosting the webinar today. I would like to start by acknowledging the Gadigal people of the Eora Nation, who are the traditional custodians of the lands that I'm dialing in from today, and I'd like to pay my respects to elders, both past and present. Just to go through the normal housekeeping things, we are recording this presentation today. The recording and slides will be made available after the webinar. There will also be Q&A at the end of the presentation, so please just add your questions into the Q&A box at the bottom of your screen. We should have about 10 minutes for the Q&A at the end of the session. So thank you to everyone for joining us to discuss ACCR's analysis of BHP's 2024 Climate Transition Action Plan, or CTAP, which will be going to a vote at the AGM on the 30th of October. Joining me on the panel to present the analysis today, we have Naomi Hogan, ACCR's Strategy Lead, Fiona Deutsch, Lead Analyst for Steel and Diversified Mining Sectors, Jasmine Fowler-Morrow, Analyst, Pranav Dayal, Analyst, and Sam Hall, ACCR's Policy Engagement Analyst. I would now like to hand to Naomi Hogan to discuss ACCR's voting rationale.
Thanks very much, Gemma, and thanks everyone for joining. I'll be running through the key messages that you will hear today from each of our speakers and our analysis. So in short, BHP's plan, ACCR is focused really heavily on its Scope 3 emissions. It's 97% of its overall emissions, and that's mostly from processing iron ore and metallurgical coal. Now, we have seen some enhanced disclosures here around BHP's plans for addressing Scope 3, and some of you may be aware that ACCR was part of a co-filing to encourage better disclosures from BHP around its activities. We withdrew that resolution because we did see some of those requests met, but when we looked at that disclosure, we found that there was a lack of ambition for addressing the emissions from Scope 3, which raises concerns about BHP's positioning as the world is really shifting towards green steel, and that has really changed since the last CTAP in 2021. So what we saw from those disclosures was quite concerning in terms of the direct capital allocation from BHP. It's very low for steel decarbonisation, just US $75 million for 2025 to 2029. And we're concerned that BHP doesn't have the capital allocation strategy to meet the scale of the green steel challenge and opportunity. We're also concerned about BHP's resilience testing and its 1.5 scenario. Basically, it's very bullish on carbon capture and storage compared to other more credible industry standards. And we're concerned that this downplays some of the transition risks that investors would need to consider. And interestingly, when we look back at the coal plans, we're seeing a real lack of disclosure on BHP's metallurgical coal mine expansions, very limited information there within its climate strategy, no insights on the forward emissions trajectory, coal-related capex, or how its coal plans fit with the IEA scenarios. And considering that we only get an investor vote on this every 3 years, we are concerned that BHP isn't demonstrating here a credible decarbonisation pathway and is insufficiently aligned with the goals of net zero and the momentum globally that's now taking place. And as such, we'll be voting against BHP's CTAP and really, hope to encourage some serious conversations about where improvement is now required. To give a quick overview of the CA100 assessment and now our quick assessment of that since we've now seen the CTAP, it's mostly very similar. We do feel that there is not a strong greenhouse gas reduction target for 2050, which I'll speak to. It's a goal. We're not seeing any increase in ambition or additional greenhouse gas reduction targets in the short term. And we do feel on just transition that BHP is making some useful movements there around its Mount Arthur coal mine closure coming up this decade. So we've given it a partial. And in short, one of our concerns at the last CTAP was that there wasn't strong ambition on some of those emissions reduction targets, and that remains a concern for us. So there's been no increased emissions reduction target ambition since 2021. And we're also seeing BHP lean into messaging around not having many targets, but in fact having goals, in which it's more of an ambition, noticing, there's no current pathway. And also, even when there are targets for some of those long-term emissions reductions to 2050, a heavy reliance on this sort of language around subject to availability and subject to the work of others. So we're still not seeing really strong, clear ambition and targets that BHP will hold itself accountable to. And with that, I'll pass to Fiona to discuss Scope 3.
Thank you, Naomi. Hi, everyone. My name is Fiona Deutsch, and I'm a lead analyst at ACCR. I was the lead author of ACCR's global study on the insights into the green steel transformation, which has been highly regarded by academics, investors, and companies alike. And in my role, I'm deeply engaged with the trends and challenges that both investors and companies face as we move towards a decarbonised future. So I know this area can be really tricky to navigate with evolving policies and increasing momentum around green steel production, which is something highly relevant to BHP's business model. So today I'll walk you through some of the key insights and risks related to BHP Scope 3 emissions and why this is critical for long-term financial stability. Please feel free to ask any questions at the end. There are no silly questions, or reach out to our stewardship team if you'd like to discuss anything here further. So firstly, from an emissions point of view, as you can see here, 97% of BHP's total emissions are Scope 3, with the vast majority coming from steelmaking. Only about 3% of BHP's emissions come from its direct operations, meaning the biggest climate impact lies in its value chain, particularly in the steel sector. So reducing these Scope 3 emissions presents the most significant opportunity for BHP to cut its climate footprint and mitigate associated transition risks. As demand for low-carbon steel continues to grow, addressing these emissions will be crucial to maintaining BHP's competitiveness in the global market. There are clear steps BHP can take to align its iron ore products with green steel pathways, and this involves ensuring its products are increasingly compatible with the technologies that its customers are adopting for decarbonising steel. So this is not only a strategic necessity, but also an opportunity for BHP to lead in this sector. So let's simplify the steelmaking process, as I'm sure not everyone may be familiar with it. So steel production has two main steps. The first step, iron making, is where iron is made. And this is where about 90% of the emissions in steelmaking come from. From there, that iron is turned into crude steel and Part B, steelmaking. So in primary steelmaking, the process starts with metallurgical coal being heated in a coke oven, which produces coking coal. That coking coal is combined with the iron ore and placed in a blast furnace to produce iron. And from there, it's placed into a blast furnace to produce the crude steel. In secondary steelmaking, which uses recycling, the scrap steel is placed into an electric arc furnace to produce that crude steel here. Now, it's important to note that primary steelmaking generates about 2.3 tonnes of carbon dioxide per tonne of steel, and that's mainly due to the use of coking coal in this process. Now, these are just a few examples of recent announcements showcasing companies and countries committing to green steel pathways, and really highlights the rapid momentum we're seeing in the steel industry's transition towards greener technologies. This demonstrates that the industry is undergoing significant transformation, and for BHP, this momentum signals both a risk and an opportunity. The shift is happening now, and those that adapt will remain competitive as the market increasingly favours greener solutions. Now, as we can see here on the pie chart on the left, nearly 50% of BHP's revenue comes from iron ore. This makes it clear just how critical iron ore is to the company's current financial performance. However, unlike its competitors, BHP's iron ore is mid-grade, meaning it requires significant processing to meet the requirements of green steel production. Now, while steelmakers who are BHP's customers also bear responsibility for decarbonising their processes, BHP is uniquely positioned to enable this transition by investing in technologies that make its iron ore more compatible with green steel pathways. Competitors like Rio Tinto, Vale, and Fortescue have access to high-grade iron ores, so they may not need to invest as heavily in these new technologies, and this presents a unique opportunity for BHP to lead. Technologies are being developed to process lower-grade iron ore for green steel, and by advancing these innovations, BHP can secure its role in the future of green steel production. And so this leads us to the next question. How much is BHP actually investing in these crucial technology pathways? The CTAP shows us that BHP's steel decarbonisation spend is still only a small part of its overall capital allocation strategy. BHP plans to directly invest just $75 million over the forward 5 years in steel decarbonisation. To put this into perspective, BHP spent $700 million on metallurgical coal capital and exploration in financial year 2024 alone. Meanwhile, Rio Tinto's planned spend on steel decarbonisation for 2024 is $100 million, already surpassing BHP's entire 5-year commitment. It's important to recognise that this is the first time we've seen forward-looking spend disclosures on steel decarbonisation from BHP, and that's a positive step. However, the scale of this investment raises critical questions about how it's aligned with the decarbonisation challenge. So let's consider the scale of BHP and its partners' current investments in Scope 3 emissions reductions. BHP's emissions from steelmaking are 48 times higher than that of shipping, yet they are investing almost the same amount in both. BHP and its partners are investing $420 million for steelmaking over a decade and $400 million for shipping in just 3 years. Now, given the scale of emissions in steelmaking, this investment disparity raises concerns about whether BHP's strategy is proportionate to the challenge, and we would strongly encourage investors to engage with BHP's management to ensure BHP is positioning itself to thrive in a green steel market and safeguard its long-term competitiveness. So the industry is looking at 4 main decarbonisation pathways. We have hydrogen DRI electric arc furnaces, hydrogen DRI electric smelting furnaces, molten oxide electrolysis, and blast furnace with CCUS, or carbon capture and storage. Now, of these options you can see in this column here, 3 of the 4 are compatible with BHP's iron ores. Now, this information comes from a report by Agora Industry, the Wuppertal Institute, and Lund University, which suggests that the hydrogen DRI electric smelting furnace, which we've highlighted, is the option that's particularly well suited for BHP. It offers strong abatement potential and high technology readiness, meaning it's close to being commercially viable, with an expected timeline of 2027 to 2030. While electrolysis and blast furnace with CCS are also being explored, electrolysis is still in its early stages with technology readiness of 3 to 4 and has a longer development timeline. And blast furnaces with CCS also have a lower technology readiness level, but provide less abatement potential, as you can see here. So what is BHP pursuing? Now, this is BHP's figure in the CTAP comparing those key decarbonisation options available. It's our view that BHP appears to be prioritising the blast furnace and CCS pathway by overstating its potential and underplaying the associated risks. If we focus in on BHP's blast furnace route on the left, you'll notice it claims significant emissions reductions down to 0.4 tonnes of carbon per tonne of steel. However, these reductions rely on a combination of technologies that are used simultaneously, like CCS, top gas recycling, and hydrogen or biomass use in the blast furnace. Now, these technologies are either unproven to materially reduce emissions or are not yet close to being commercially viable. For example, there are no large-scale CCS projects for blast furnaces anywhere in the world, and the CO2 transport and storage infrastructure is substantially underdeveloped. This figure also presents the blast furnace pathway as equally or more viable and competitive compared to more matured pathways like DRI, electric arc furnaces, and electric smelting, which is a notable contrast to the independent academic research that we showed in the previous slide. So from our perspective, this figure gives an overly optimistic view of the feasibility of the blast furnace route. It's important for investors to consider whether this representation accurately reflects the challenges BHP faces in relying on unproven technologies. And while we don't want to be over-prescriptive and tell the company exactly what to do, we do believe shareholder funds should be used in the most effective way possible, both in terms of cost and emissions. So again, we encourage investors to look at the evidence and engage with BHP's management to ensure that there is a clear understanding of how these pathways currently stack up against one another. And our concerns about BHP's prioritisation of CCS and other limited potential opportunities were also demonstrated in our steel report earlier this year. In that analysis, we found that while BHP was exploring the most projects overall, it was focusing disproportionately on those with limited potential to reduce emissions compared to its peers. Our findings align with broader industry sentiment regarding the limitations of CCS of the pathway. We saw that recently with BlueScope's September 2024 CTAP, which stated BlueScope's view is that due to technical limitations, CCS alone is not a viable pathway to achieve net zero emissions. And on a final note on BHP's Scope 3 disclosures, while it's really encouraging to see more information being shared, there are still gaps that leave investors with insufficient detail to gauge the progress towards a comprehensive steel decarbonisation plan. So as shown in the figure here, BHP's decarbonisation projects for steelmaking offers useful insights into the abatement potential, the project type and scale and stage of these projects. However, the disclosures lack specific timelines and measurable objectives across all of these projects, as detailed case studies were only provided for 6 of the 30 projects presented in this figure. Without a clear framework to track progress, it becomes difficult for investors to assess how well these projects are advancing and how BHP is aligning with its medium and long-term Scope 3 goals. And so if you remember just 3 things from this section of the presentation, these are the key points. Firstly, BHP's current decarbonisation spend is insufficient when compared to the scale of its steelmaking value chain emissions and the global shift towards green steel. Second, there are concerns about BHP's over-optimism for the blast furnace CCS pathway. Understanding the risks associated with this route means investors may not have the full picture and may not be as effective as a solution as presented. And finally, BHP's plan could benefit from more detail. Investors need clear timelines and measurable objectives and a framework to track progress in order to fully evaluate BHP's Scope 3 decarbonisation efforts. Moving now to BHP's metallurgical coal assets. To be honest, there isn't a lot of clarity around BHP's future plans for its met coal business. Given that significant material risk posed by this business, we would expect the CTAP to provide more detailed information. The information currently provided in the CTAP primarily focuses on fugitive emissions, which we'll touch on later in the presentation. However, investors are left in the dark about BHP's broader plans for its met coal assets. It's unclear how the continuation or potential expansion of this segment fits into the company's overall decarbonisation strategy. And so we're here to provide more clarity on that front. We've conducted a detailed analysis of BHP's current and future metallurgical coal production profile including proposed mine extensions and expansions. We tested this against both a net zero emissions pathway and an announced pledges scenario APS pathway, and we found that BHP's forecasted met coal production is misaligned not only with the Paris Agreement, but even with the APS. By 2050, it's still unclear how the company's production plan fits into the net zero emissions strategy, with production levels remaining well above the NZE and APS production targets. Now, as shown in this table on the left, BHP has several significant met coal projects on the horizon. For instance, the Peak Downs continuation project is proposed to continue for another 93 years to 2116. Similarly, the Saraji East expansion would extend production by 20 to 30 years, and the Caval Ridge expansion is proposed to continue to 2056. Yet, despite these long-term commitments, BHP CTAP does not outline a clear plan for transitioning away from met coal or how it plans to adapt to the expected decline in demand as the steel industry moves towards coal-free green steel production. We commissioned a global survey of investors that found that the majority of investors foresee a transition away from metallurgical coal and steelmaking, and at 80% believe that the risk profile of met coal will increase in the next decade. So this lack of clarity leaves investors without a full understanding of how BHP intends to navigate the changing market dynamics in light of these expansion plans. This is a critical area where investor engagement is needed. We encourage ongoing dialogue with the company to push for more transparency and to ensure that BHP's future plans for met coal align with its long-term decarbonisation strategy. And finally, let's take a quick look at two of the biggest markets for met coal, India and China, and what they're signalling about the future of steel production. In India, steel decarbonisation momentum is growing rapidly, especially with Europe's Carbon Border Adjustment Mechanism, or CBAM, on the horizon. India was the second largest steel exporter to Europe in 2023. And in September 2024 alone, so last month, there were two major developments. Firstly, India's Ministry of Steel released the Greening the Steel Sector in India Roadmap and Action Plan. And second, India also announced it would create a green steel policy and consider government procurement for decarbonised steel. Meanwhile, in China, the world's largest steel producing country, the decarbonisation of steel is also gaining traction. Just last month, China announced that steel would be included in its carbon emissions trading scheme as early as this year. And it also did not permit any new coal-based steel projects in the first half of this year. These developments highlight the increasing uncertainty surrounding the long-term demand for met coal, reinforcing the need for investor engagement on BHP's future plans on this segment. And with that, I thank you, and I pass over to Pranav.
Thanks, Fiona, and thanks everyone for dialing in today. My name is Pranav, and I'll be discussing BHP's climate scenarios and planning ranges, in particular with relevance to their resilience testing in a 1.5 degree world and alignment with the goals of the Paris Agreement. Our analysis finds that investors are getting an incomplete view of BHP's resilience in a 1.5 degree world, and this is driven primarily by the limitations in the its own 1.5 degree scenario that it uses in that resilience testing, along with methodologies used to assess the net present value. We also find that BHP's planning range implies 2 degrees of warming by 2100, which is a world where the goals of the Paris Agreement have not been successfully met, and where the level of warming risks breaching significant tipping points and further exacerbating climate change further. Next slide, please, Fiona. So I want to begin by discussing how BHP calculates and tests the resilience of its portfolio in a 1.5 degree world. So BHP has created its own 1.5 degree scenario, and the pricing outputs of its scenario feed into a net present value, or NPV, analysis across all of BHP's assets. And the results of that are shown on the chart on the left there. It shows minimal downsides for BHP's lower grade iron ore assets and metallurgical coal assets, and we believe this could be misleading for two key reasons. First, that NPV analysis is a pricing only sensitivity, which doesn't take into account changes in production and sales volumes that may occur. So it assumes the same production and sales volumes as BHP's 2-degree planning case. We believe that this doesn't fully reflect the risks and impacts that may come from reduced demands and sales constraints in a lower pricing environment, and which is why the assumptions around volumes in this scenario are somewhat limiting. The second key reason is that the steelmaking pathway in BHP's 1.5 degree scenario, as shown by the chart on the right there, continues to focus heavily on blast furnace technology and modified blast furnace with CCUS over technologies such as DRI electric smelting and DRI electric arc furnaces, which, as Fiona mentioned earlier, offer greater abatement potential and are more technologically mature. And so with the greater focus on blast furnace-based technology, BHP's 1.5 degree scenario is able to sustain the demand for metallurgical coal and lower grade iron ore assets, which positively influence the pricing outcomes within that scenario, which then cascade into the NPV assessment. So what does this mean for investors? It basically means that they're not getting the full risk picture. The collective impacts of these two reasons means that the transition risks that iron ore, lower grade iron ore and metallurgical coal face as the market moves towards cleaner steel production is not fully captured in BHP's current resilience testing. Next slide, please. So now looking under the hood at what the metallurgical coal assumptions are in BHP's 1.5 degree scenario, we can see that metallurgical coal on a cumulative basis is 50% more than the IEA NZE scenario. And this roughly equates to about 10% of the remaining carbon budget. BHP's planning range, which is aligned with a 2-degree world, 2-degree warming by 2100, can see up to 90% more met coal than the IEA NZE scenario, about 20% of the remaining carbon budget. And so the underlying reason for why BHP sees a continued role for blast furnaces, not only in its planning range, but also 1.5 degree scenario, is based on the assumption that blast furnaces are essential to manufacture high quality steel, especially for industries such as the automotive sector. But this assumption is being increasingly challenged with modern advances in electric arc furnace technology, which are showing that blast furnaces are not essential to produce high quality steel. Leading steel makers like SSAB are already producing green steel made from recycled materials using electric arc furnaces and have plans for large plants to make high quality steel via the DRI electric arc furnace route. Next slide, please, Fiona. And so due to the large role for metallurgical coal and blast furnaces, along with a slower rate of decline for fossil fuel-based energy, BHP's 1.5 degree scenario sees greater gross cumulative emissions, which means that it needs to rely on more than double the amount of carbon dioxide removal than the IEA NZE scenario to stay within the remaining carbon budget. The IPCC has noted that over-reliance on large-scale carbon dioxide removal poses a significant risk to limiting warming to 1.5 degrees by 2100. And the latest research shows that the most realistic scale-up of carbon dioxide removal technologies, such as CCS, carbon dioxide capture and storage, BECCS, which is bioenergy with CCS, and DAC, which is direct air capture, can be scaled up to 6 gigatons per annum by the year 2050. BHP's current 1.5 degree scenario assumes at least 8 gigatons, which is more than that scientific study. And we believe this number is somewhat understated due to the latest developments to the latest carbon budget. Next slide, please, Fiona. And so to explain this a little bit more, I'll try to explain it with in the context of the different carbon budgets at play here. So the inner circle there is 190 gigatons of carbon dioxide, which is the latest actual remaining carbon budget. And the outer circle is the gross cumulative emissions from BHP scenario, which is more than 2.5 times the remaining carbon budget. And so to BHP scenario, as mentioned, has a certain amount of carbon dioxide removal factored in, which is demonstrated by that arrow there at the bottom of the screen, which takes its gross emissions to the net emissions, which is emissions after removal. And this level of carbon dioxide removal reflects the 8 gigatons per annum by 2050 that's currently mentioned. However, we can see that this amount of removal doesn't get BHP and doesn't limit its scenario to within the carbon budget, which means that an additional amount of carbon dioxide removal is required, which equates to about double the amount that's factored in. And that's one of the reasons, sorry, can you just click please, Fiona? And that's one of the reasons why we think that BHP's scenario understates the amount of CCS and carbon dioxide removal in its scenario. And so the total amount of CCS and carbon dioxide removal required is about 316 gigatons in BHP's scenario to stay within the most recent developments to the remaining carbon budget. And that's roughly around 8 years of global emissions. Carbon dioxide removal at this scale is massively unproven, and scientific evidence suggests is unlikely to be able to be achieved within that time frame. Next slide, please. And so this is a summary of where we currently are in terms of BHP's resilience testing. It's built upon a scenario which has inflated assumptions around met coal and heavy reliance on carbon dioxide removal, and NPV assessment, which doesn't adjust for changes in production and sales volumes. And based on that, investors are getting a somewhat limited view on the resilience of BHP's portfolio in a 1.5 degree world. We believe there is space and room for a more proactive and credible approach where an industry standard and science-based scenario such as the IEA NZE is used, or at least used as a sensitivity additional to BHP's 1.5 degree scenario. And also adjustments to production and sales volumes are made prudently to reflect what would happen in a given market, to provide investors with a more credible and trustworthy view on the resilience of BHP's portfolio in a 1.5 degree world in the longer term. Next slide, please. And just before I finish, I want to discuss BHP's planning range. And this is the view of the world that BHP factors into its operational planning, strategy, and investment decision-making. In its latest CTAP, BHP has said that its planning range implies about 2 degrees of warming by the year 2100, which in effect is saying that BHP is planning for a world where the goals of the Paris Agreement to limit temperatures and warming to well below 2 degrees and ideally to 1.5 degrees have not been successful and have failed. And so what does this mean for the future? Accepting a 2 degree scenario and a 2 degree world means accepting greater physical risks, economic losses, and the higher costs of a delayed transition. Even at 1.2 degrees of warming, we're seeing significant climate impacts across the globe, as we have just seen this week in the US with Hurricane Helene. Overshooting 1.5 degrees increases the chances of crossing irreversible and self-perpetuating climate tipping points, which can significantly worsen and accelerate the rate of global warming. Between 1.5 and 2 degrees of warming, 6 climate tipping points become likely and a further 4 become possible. The best climate science now stresses the importance of limiting warming to 1.6 so that through technologies, we have the chance to return back to 1.5 by the end of the century. A prompt transition is not only more effective, but more cost efficient, and the estimated $22 trillion cost of sequestering enough carbon dioxide to reduce emissions by 0.1 degrees underscores the financial burden of a delayed transition. And this is why we believe the uncertainties and risks associated with deferring climate action to speculative levels of carbon dioxide removal should be taken with a grain of salt and a degree of skepticism. And why we believe investors need to have a clearer view of the resilience of BHP's portfolio in a 1.5 degree world. I'll now pass to Jasmine. Thanks for listening.
Thanks, Pranav, and thanks all for joining today. My name's Jasmine, and I will briefly speak to BHP's operational emissions and decarbonisation strategy. So, as Fiona mentioned previously, Scope 1 and 2 emissions account for only around 3% of the company's total emissions footprint. However, given BHP's target to achieve net zero by 2050, as well as its growth plans for copper and potash, we expect the company to be doing all it can to reduce emissions in its operations as quickly as possible. So, looking at BHP's Scope 1 and 2 emissions to date, we can see that the company has made some positive progress in reducing its Scope 2 emissions. As a result, BHP's latest operational emissions are 32% below its 2020 baseline, meaning the company has met its 2030 target 6 years early. However, progress is yet to be seen on Scope 1 emissions, which have remained largely unchanged in the last 5 years, as you can see here. This is because emissions reductions to date have been achieved with power purchase agreements, or PPAs. Now, with only PPAs readily available to reduce emissions, and without a more ambitious medium-term target, the company risks back-ending the majority of its decarbonisation efforts. Further, with the company aiming to grow its potash and copper operations, operational emissions will increase unless solutions for reducing Scope 1 emissions are available. For this reason, shareholders should expect clearer commitments in BHP's CTAP that it is committed to achieving further reductions in both Scope 1 and 2 emissions this decade. So BHP has emphasised that the company's emissions trajectory will be non-linear moving forward, and this is clear looking at the company's projected emissions. So BHP expects its operational emissions to rise in the coming few years, and the emissions trajectory becomes increasingly uncertain from 2025. So based on this uncertainty, BHP sees a possibility that emissions in 2030 will be the same as they are today. Allowing emissions to rise in the near term and drop later on increases the risk of overshooting both company and country carbon budgets, and this makes the goals of the Paris Agreement much harder to achieve. Now, looking beyond 2030, the uncertainty range to BHP's emissions becomes concerningly large. And if we look to 2050, BHP's pathway indicates that up to 5 million tonnes of CO2 equivalent might still be emitted by the company at the time of its net zero target. So the lack of certainty here, if not resolved as soon as possible, indicates the long-term value of the company's commodities are not necessarily guaranteed. This also signals a likely reliance on offsets. Which brings me to my next slide on offset use. So BHP's commitment to achieving its medium-term target without offset use is a positive step. However, for its 2050 target, BHP currently estimates it will need to rely on offsets for 15% of its operational emissions. A 15% reliance is higher than what is considered best practice. So, for example, both the IEA and Science Based Targets Initiative recommend that companies should achieve at least 90 to 95% of emissions reductions through direct abatement and only rely on offsets for 5 to 10% of emissions. So in light of this, we would expect BHP to strengthen its commitment to net zero by prioritising emissions reductions over offsets, in line with shareholder expectations, as well as those outlined by IEA and SBTi. And finally, I want to finish by looking at the 3 largest sources of BHP's operational emissions and the related opportunities we see that could help eliminate these sources. So starting with diesel, we see an opportunity for BHP to advocate for policies or incentives that would allow the company to phase out diesel use much sooner. Switching to renewable electricity, we see an opportunity for the company to aid the energy transition by investing in projects that directly displace fossil fuel power generation, as well as prioritising renewables investments in more isolated locations such as the Pilbara. And finally, on fugitive methane emissions, we see opportunity for BHP to move more rapidly to implement technologies that actually abate these potent greenhouse gas emissions and provide shareholders with clearer abatement potentials and timelines for this plan. So essentially, the sooner BHP can remove these emissions sources from its operations, the sooner it has safeguarded the long-term value of its commodities. And with that, I will hand over to Sam to take us through the company's lobbying activities and disclosures. Thanks.
Thanks very much, Jasmine. Hi everyone. My name is Sam Hall. I'll be speaking now to BHP's lobbying as it relates to the CTAP. And in doing so, I want to address 2 main concerns. The first is that BHP hasn't demonstrated how it is using policy advocacy to support the CTAP, so to support its decarbonisation goals and its transition strategy. That's of course despite both BHP and investors recognizing that really critical enabling role that policy plays in getting to those goals. So we believe BHP should be disclosing specific policy settings it needs to support its transition, including those relating to Scope 3 emissions, and that would make its CTAP more credible and more powerful. The second concern that I want to touch on is around governance, both of its own lobbying and industry associations. We think BHP needs to improve that governance of lobbying in order to ensure that the lobbying activity is actually boosting and not hindering its CTAP goals. Next slide, please. So as I've mentioned, BHP's CTAP does lack information on how its advocacy is actually integrated into strategy. Page 41 of the CTAP is where they touch on that. We've summarized that in the grey box, and there unfortunately isn't much to it. It talks about planning to support the CTAP with certain climate policy engagement, but only really mentions that it will advocate to government, that it will help shape industry associations, provide a view on decarbonisation pathways from an industry perspective, make policy more efficient and effective, but none of that is really very concrete. It's not information that indicates what specific policy support would be needed to enable the CTAP goals. Now, BHP does make disclosures elsewhere, of course, on its direct advocacy and its industry associations, and we acknowledge that's a decent base to build on, but unfortunately, those disclosures are not connected to strategy. They sit very separate to the CTAP and other strategic reporting, but they're also quite focused on broad policy positions rather than sketching out the actual ambition of where the company wants to move policy setting, ideally to reach its goals. So we think BHP would, of course, do well to embed that lobbying deeper into its CTAP and other strategic thinking. And that's also a position that's echoed by the Net Zero Investment Framework 2.0, which, as we've got there, says that policy engagement is really increasingly recognized as a critical component of net zero strategies and transition plans. And what the framework does is recommend that this is disclosed in the CTAP specifically, and that interdependencies between the net zero targets and that wider policy environment are named specifically. Next slide, please. Yeah, so onto the second concern, onto the top of governance. We think firstly, it's important to note that overall BHP's lobbying has improved slightly since its 2021 CTAP, going from a D to a C on influence maps scoring. That's been mostly driven by some changes in BHP's direct lobbying, not in industry association changes. At the same time, it's important to keep in mind that BHP's own lobbying still only remains partially aligned with the Paris goals. So there is some way to go still there. We think BHP should boost its advocacy, including around Scope 3 decarbonisation, as well as assess the overall alignment, the overall Paris alignment of its advocacy, because it doesn't currently do this, but this is something that is expected by investors through the Global Standard on Responsible Climate Lobbying. Now, if we turn our attention to industry associations, as you can see from the grey line in the chart there, these have not improved in their advocacy, their real world lobbying impact over the last 3 years in a material way. That very slight uplift you see in the grey line, some of that actually just comes from BHP leaving certain associations and not on climate grounds either, so not from tighter governance. Essentially then, what we see here is BHP's insufficient governance of the industry associations, that is not taking enough action to improve them, means that the associations are a material drag on the real world impact of its lobbying. Influence Map is also noted in its disclosure scorecard assessment of BHP's review process for the industry associations that there is, once again, there's a base to work from. There's a decent monitoring process in place, but BHP is routinely not identifying or addressing issues of misalignment with the Paris goals. Next slide, please. And yeah, this slide here shows this visually. BHP is an influential member of a number of associations under that red bracket that are consistently misaligned with Paris. They haven't improved much in the last 3 years either. And unfortunately, BHP is not finding material misalignment with those organizations. I guess to sum up, all of this clearly falls short of shareholder expectations, which were set out in 2021, where nearly 99% of shareholders, that includes, of course, BHP management, supported a resolution to ask BHP to ensure that it does identify and mitigate these Paris misaligned advocacy activities by its associations. So clearly then there needs to be a boost in the government's approach to lobbying if it wants to make sure that its lobbying is an enabler, not a constraint on its CTAP. And if it's seeking to ensure that it's supporting policy for a Paris-aligned world rather than Paris misaligned worlds or outcomes like the 2-degree world in BHP's planning range that we've heard about, for instance. All right, that is all from me, and I will hand over to Naomi now.
Thanks, Sam. I just wanted to quickly recap some of the key points, as there was a lot of information that we've heard today. So in short, ACCR has found that the CTAP is not supportable for a number of reasons, moving beyond just looking at the disclosure and looking at the alignment of the strategy in light of climate science and in consideration of future risk. And we've found that there is comparatively low forward capital allocation towards steel sector decarbonisation, as we heard from Fiona. There is lack of information on the company's metallurgical coal emissions and expansions, which could be very sizable. There's limited resilience testing for different scenarios. As we heard from Pranav, there's some really big assumptions built into those resilience tests, which we think investors need to explore more with the company. There's a really high reliance on carbon capture and blast furnace technologies, despite the fact that particularly in steel decarbonisation, we're seeing other lower emission technologies looking more feasible sooner. The concerns around the operational emissions being roughly flat until the 2030s, when we know this is a critical time for action, and that climate lobbying is not well integrated into the CTAP, despite growing investor recognition that that is a critical component of transition plans. I'll now pass to Gemma and to you all for Q&A.
Thanks, everyone. Okay, so we don't have any questions in the Q&A box yet, but please, if anything has arisen throughout the presentation, throw your question in there. We have a couple of pre-prepared ones to get us started. So Pranav, why is it important for BHP to have more prudent assumptions around CDR in its 1.5 scenario? And what are the risks if they don't?
Thanks, Gemma. I mean, theoretically, one can factor in as much carbon dioxide removal as they would like to keep any given scenario within a given carbon budget. And so the credibility of a given scenario and the resilience testing that it feeds into depends on the feasibility of these underlying assumptions. So I think carbon dioxide removal is one of those critical assumptions that need to be applied quite prudently and in line with the latest science to retain the integrity of the scenario and then the resilience testing that it informs. And the risks with associating and involving significant amounts of carbon dioxide removal is that it essentially defers climate action by relying on significant amounts and speculative amounts of carbon dioxide removal down the line, and prevents innovation in mitigation levers for decarbonisation. And so specifically for BHP, as blast furnaces continue to play a big role, it shows a lower risk to BHP's portfolio. However, if CDR and carbon dioxide removal was applied more realistically, electric arc furnaces and electric smelting furnaces would dominate and capture more of the market share in steelmaking and present risks to BHP's assets that the current resilience testing doesn't indicate. So those are the kind of important, that's the reason why applying prudent assumptions is important, and the risks to when it's misapplied.
Okay, awesome. Thank you, Pranav. Jasmine, probably one for you. BHP has been a leader in Scope 2 emissions reductions. Why does this success not translate to Scope 1?
Yeah, thanks, Gemma. So yeah, as I mentioned, BHP has made some good progress in the last few years in reducing Scope 2 emissions, and they've done that through the use of renewable power purchase agreements or PPAs. And this is a very natural or sensible first step in decarbonising operations, given that renewables are cheap and they're readily available. However, this is arguably the easy bit in terms of reducing operational emissions, as there's no agreement that you can sign to abate Scope 1 emissions. And so, among other things, this will basically entail an entire technology overhaul in its operations. So for this reason, because of the lift that is required, it is in BHP's best interest to begin this overhaul as soon as possible, because if these Scope 1 emissions cannot be abated, then any growth in its mining operations will increase emissions. And so then the company is risking back-ending all of its decarbonisation efforts and also adding to the work that it will have to do in the long run.
That's very clear. Thanks, Jazz. We have had one come through in the Q&A box. Have you guys seen any data on emissions intensity improvement between high versus low met coal in blast furnaces? It's probably one for you, Fiona. Have we seen any of that data?
No, but I think it's a great question that we should ask BHP. We have Mike Henry in the media saying that its high quality iron ore reduces emissions for its customers. So we would like to see that data. But no, unfortunately, there hasn't been research on this.
Thanks, Fiona. Another one just on lobbying, Sam. How does BHP's climate lobbying compare to other major miners in the sector?
Yeah, it's a great question. I mean, I mentioned in my part of the presentation that, pegging to the science, it's only partially, and it only has sort of a mixed alignment to the goals of the Paris Agreement. And ultimately, that's where we want to anchor. But even there, even if we move from there to benchmarking against competitors, BHP is really middle back of the field when it comes to the actual real world impact of its lobbying. I think BHP does have a lot of disclosures, but of course, the disclosures are more of a necessary but not sort of sufficient condition. What investors really need and what we all need is that shift in real world impact. I think better on balance amongst peers are Vale, SSAB, and Fortescue. And that's kind of interesting given what the team has talked about, that the ambitions and the readiness to transition amongst those competitors is also stronger. So there you see quite a strong link between strategy and lobbying once again.
Thanks, Sam. Very clear. And look, I think it's probably worth just addressing in a little bit more detail, Naomi, the withdrawn resolution. We did file a disclosure-based resolution with the company, but withdrew it just before the notice of meeting was released, and we're now recommending this against the CTAP. Are you just able to provide a little bit more detail about that?
Thanks, Gemma. And yes, look, this has been a really big process over many months with many institutional investors, some of whom are potentially on this call, around really looking to enhance those disclosures across the board from iron ore miners. And so we saw a commitment earlier this year from Rio Tinto, and we sought the same commitment from BHP around those enhanced disclosures. What we saw from BHP from its decarbonisation roundtable earlier this year to the CTAP, we did see some notable and additional information regarding particularly the spend that it was forecasting on steel decarbonisation, and some much more detailed case studies over a number of its projects. So it was a difficult decision because we still believe that there is much room for improvement still with BHP in terms of its disclosures around steel decarbonisation, but felt that on balance, the real issue that we can now address and discuss is in the strategy alignment in the CTAP, or lack thereof, with its own net zero goals and ambitions. And so we do think that at this point there is enough disclosure there to start forming views and having more detailed conversations with the company around its Scope 3 plan. And there is just so much more room for ambition there. I think Fiona laid out really clearly the comparisons on spend for steel decarbonisation for BHP compared to peers. That's an area that absolutely needs more work. I think from our, we had some really interesting and constructive dialogue with BHP. I would say that the company can probably move from being on the defensive in terms of trying to explain why it's too hard or why it's moving slowly, to actually investing in getting on the offensive. Where are the opportunities? How can we ensure that our business is really resilient going forward? And how can we actually really embrace and be a part of some of those quite exciting steel technologies that are now really rapidly moving towards commercialization, that will mean that emissions really come out, that met coal is not required. That's the sort of momentum we think that BHP can build, but we're not seeing that yet in the CTAP, which is why we as ACCR will be voting against the plan and really encourage more conversations on where that ambition can improve.
Awesome. Thanks, Fiona. Look, we've 1 minute to go. We might just answer one more question that has come through. Fiona, this is probably one for you. Where should BHP be allocating its capital to accelerate steel decarb? Talking to steel producers, capital doesn't seem to be the bottleneck for DRI ESF development.
Yeah, it's absolutely R&D. We saw that Rio Tinto and BHP are working with BlueScope on ESF technology. But when we look at the actual figures of direct investment from BHP, for example, $75 million, and we're not sure where that is going and whether it's going across a variety of projects, I think capital could be a bottleneck, but it absolutely is R&D. And we can see that with the readiness timelines of this technology, it's really close, 2027 to 2030. So this is nearly commercial, this technology. Allocating capital towards this and to getting this out is BHP's best opportunity to reduce these emissions.
Very clear. Thank you. And one final question before we wrap up. Have you seen BHP ever discuss CBAM or the Chinese ETS?
I can't comment on Chinese ETS, but CBAM they have discussed in their economic and commodity outlook. It's quite detailed, so I do recommend you go to the website and read that.
Excellent. Thank you everyone for joining us. Please get in touch if you have any follow-up questions for the team. And yes, we will send out a recording of the webinar, and thank you again for your time. We really appreciate it. Have a great day, everyone.